Hello. Singapore has achieved a status as regional financial centre, set to rival Switzerland. But apart from bonds and equities, did you know that it's also very strong in foreign exchange, second only to Tokyo? We're joined today by the Managing Director and Chief Executive of OANDA Asia Pacific, a company which helps you trade foreign exchange. His name is Rajesh Yohannan, and he joins us here in the studio. Thanks very much for coming in. When we talk about retail investors getting into foreign exchange, what would be the introductory type of things that you say to them? Because it can become quite complicated, can't it?
Yeah, absolutely. It can get complicated. But you have to realize that when you look at asset classes, this is the largest and the most liquid of all asset classes. This is the amount of volume that is traded in forex is about 5 trillion a day. You know, just to put it in perspective, that's about 30 times NASDAQ and NYSE volume put together. So it's an asset class that affects your daily life. It's an asset class that affects you even if you're not a trader. And therefore, it does make sense for you to have an opinion about forex. It's an asset class that allows you to trade 24 hours a day. Mm-hmm. As you can see, you can trade across multiple markets, from the US market to the UK market to the Japanese market to the Asian market and the Australian market, and you can do it based on your lifestyle. So you could be working a 5 to 8 job, or an 8 to 5 job, sorry.
An 8 to 5 job during the day and a 5 to 8 job during the night.
Absolutely. And you could go back and trade the US market at the end of your working day.
But you know, there are so many currencies in the world, but realistically, are you really going to trade, the Hungarian forint type currencies, the backwater currencies, shall we say?
Yeah, they're called the exotics normally.
You trade the majors?
Yes. And if you go to any broker, OANDA included, you would get the opportunity to trade about 70 to 80 currency pairs. But close to 95% of the volume is concentrated on these 7 major currencies. Right. And the bulk of the forex trade that happens focuses on these major currencies. And especially for a newbie into forex, the large swings that happen in the forex industry are determined by these currency pairs.
What happens though when you go to one of these seminars? Perhaps you also have these trading seminars. A lot of people who are watching us talk about this might have been to a seminar already where they're getting a sales pitch. What's the reality check? What do investors really need to know before they start getting active in the forex markets?
Some of the basics. I mean, would you put your money in a bank that is not regulated? Why would you trade with a provider that's not regulated? So check whether your trader or the company that provides you the trading services is regulated by some of the better regulators in the world.
Like who? Like
Monetary Authority of Singapore in MAS, or FSA, or FCA in the UK, or NFA in the US. OANDA, for instance, is regulated by all of them. And once you're regulated by 4 or 5 of the largest regulators in the world, there are certain minimum standards that you have to adhere to. That's one. Check if your funds are segregated. What does that mean? That means that check whether your funds are not going to be used for operational purposes and your funds are going to be used for trading only. And
so
you're trading
only. They remain in your account.
They remain in your account. And even while if you remain in your account, are they being, it's called customer segregation, segregation of customer funds, and that's something that's critical to do. Check whether, don't go by the highlighted, I can get 500% returns and I can get, you see ads of Lamborghinis, yes, and stuff like that. Don't go by that. And don't go by simple pricing. Look through that and understand the total cost of trading. Sometimes it's not just the spread. Many of the brokers charge commission. There are hidden fees. The platform may not be stable and that may affect you. The platform may not be fast enough and that may affect you. Check all of those kind of stuff. Check out their practice platform. Almost every forex broker has a forex platform, a forex practice platform. Mm-hmm. Go into the practice platform. Most of the time it's free. Go in and try. Go for a broker that actually tells you or requires you to give a very little part of your capital. OANDA, for instance, you can trade with $1 if you want to. So you could come onto the platform and take a little bit money out.
Right, so how do you trade with $1?
You could if you wanted to.
How?
The good thing about the forex industry, and I should have mentioned that upfront, is that you get a leverage of 50 times. So the moment you bring in $1, you have $50 to trade. And you could buy anything you want with $50. Any currency pair that you want with $50. Mm-hmm. But most people don't do with $1.
Yes.
So on our practice account, you would get $100,000 for you, or that is dummy dollars, of course, for you to start trading. And
in the practice,
in the practice account, and that mirrors completely to our live environment. So even for experienced traders, I often tell them that if you have a new strategy that you've come up with, don't try it with real money. Go test that strategy on the practice platform, and then bring it back into the live platform.
Even if they have a live account already.
Of course, and that's one of the unique things about OANDA. So your practice accounts never expire. You can come into our platform, you could be trading with us, you could be a trader with millions of dollars with us, but you've come up with a new strategy. What should you do? Don't risk it on your live platform. Try it on your demo platform, then bring it back to live.
What other tips and tricks are there for investors?
Don't be sucked into leverage. So 50:1 is what is offered. There are lots of players who also, what is offered by OANDA. There are lots of players who offer very, very high leverages.
Like what?
200:1, 500:1 is not common. It's not uncommon. 1,000:1 is not uncommon. It's a bit uncommon, but still offered by a few players. But it's a double-edged sword, and it can really, really hurt you.
In other words, your gains might be amplified, but so will your losses.
Absolutely, you may lose more than what you put in. And that's something that can happen. So that's the second thing. Perhaps the first, most important thing that you really need to keep in mind is the concept of risk capital. And what is risk capital? How much of money can you risk losing? And everybody has a risk capital. Every individual, every organization, every institution has a risk capital. This is how much I can afford to lose. Never, ever trade more than your risk capital, because you will end up making irrational and quote-unquote stupid decisions.
Do you need to be a technical analysis whiz kid, or have an algorithm that actually does the trading for you while you're asleep?
We talked a bit about tennis before this. Do you need to know everything to enjoy a game of tennis? The answer is no. Do you know all the sophisticated techniques associated with wanting to trying to become the world's best tennis player? No. This is a learning process. So if you are a forex trader, and a serious one, you need to invest in learning and continually learning. This won't happen overnight. And for you to become a good technical analyst, that requires investment in terms of time and money.
Finally then, the one thing that you can control when you are investing or trading any security is risk. Absolutely. You can't control the upside, but at least you have some control over the downside. You can put in stop losses, for example. What sort of risks should investors and traders in foreign exchange be aware of?
I talked about risk capital, but what you mentioned about stop losses is absolutely critical. And when we look at our database of the traders who make money and who make money on a consistent basis, they use stop losses. They are a little bit devoid of emotion when it comes to that. So they've set the stop loss, and if the stop loss is breached, they get out. That's something that you have to put in place. You can be wrong. Sometimes you have to admit that you can be wrong. At that point, you have to get out. Don't go for too much of leverage. Start with a conservative leverage, especially with new strategies, and then go on to continue to learn and continue to trade with a lot of knowledge about the market. You have to be up to date. So go for a broker that gives you a good mobile platform. So you could be in Orchard Road shopping with your wife, and you could get a SMS alert or a push notification, and you may have to do something. And when you're choosing a broker, choose one that allows you to do something with that.
It's very good to talk to you. Thank you very much, Rajesh. Before we let you go, though, I do want to ask you about this graphic. With a whole bunch of numbers on it, we can see that it's a buy and sell quote panel, shall we say. But can you just talk us through what all these numbers actually mean?
Sure. The quote panel is almost like if you're on an e-commerce website, the pricing, and this is perhaps the most important thing that you need to look at. And so the number on the left is the price at which you buy, and a particular currency pair, and the number on the right is the price at which you sell. And the number that you see in the middle is what is normally called the spread. So the difference between the buy price and the sell price. Mm-hmm. Usually, people see a lot of numbers moving on the screen and they tend to get confused. But what you really need to focus on is on the last 2 digits. They are the numbers that actually tend to move much faster.
The big ones there.
The big ones.
That's actually the 3rd and 4th decimal place.
That's right.
Right.
And that's the number that you really need to focus on.
And the spread, that little number there in the middle?
That's the difference between these 2 numbers that you see.
Right. And so what should that number be?
It depends on what a broker can offer. At what price is the broker getting that currency, and at what price is the broker ready to sell that currency to you?
But
so that spread.
What should it be ideally then?
You could, for example, OANDA is currently running the euro dollar for 0.8, and it will fluctuate constantly depending upon the rate at which we can buy and the rate at which we can sell. So this number is never going to be constant. It's going to change depending upon market conditions.
All right. Thanks very much again for coming in, Rajesh.
Thank you very much. Thanks for having me.